Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Chris Overholt from OverActive Media. OverActive trades on the TSX Venture Exchange under the symbol OAM and on the OTC under OAM-TSX.V. The company is trading at $1.40 with roughly 80 million shares outstanding, or about $112 million market cap. I'd now like to hand it over to Paul Andriola.
Thank you so much, Trevor. Great to have Chris with us today. OverActive Media is a company that's just gone public not too long ago. We caught up with Chris several wears ago to try to get a good understanding of the business, but we're really happy to have him here to sort of tell us more and to tell everybody, all our listeners, more about the company. So Chris, why don't I hand it over to you and let you go?
Okay, great. Trevor, Paul, thanks very much. And good afternoon, everyone, and thanks to each of you for your time today. I'll spend a few minutes talking a little bit about the origins of the company and how we have come to this place over now almost 3 years. October 1st will actually be our 3-year anniversary as a company. I'll talk to you a little bit about the broader esports and gaming industry, and maybe more specifically how OverActive Media fits into that industry. We do have, in our estimation, a very unique position in all of this, and look forward to sharing that with you. And then finally, I'll give you a glimpse of our future. We're in the middle of a couple of big things, big initiatives, and a project specifically here in the city of Toronto that I'm sure you'll be interested to hear about. So more to come. Maybe as a matter of getting started, just a little bit of background on me. I think it speaks to the very thesis that we have around the company and the industry generally. So my background is, for the most part, traditional sport, and in this country, Olympic sport over most of now 25 years. I started my career with the Raptors in 1996. I worked for that organization first as the Raptors, and then later as a young executive at Maple Leaf Sports, working for Richard Petty and Ian Clark and Tom Anselmi in that group. I was there until 2003 before I was recruited to go down and run the business of the Florida Panthers. And subsequent to that, I moved over to the Dolphins to lead the sales and marketing effort there, working for Wayne Huizenga. Just about at the 4th year, I was recruited to come back to Canada to be the CEO of the Canadian Olympic Committee. And I did that proudly until the fall of 2018, over 4 Olympic Games, again, as the CEO. So why is all of that relevant? Why does that matter to our business? Well, because our thesis is in part that esports industry, as it's taken shape and as we imagined it to take shape in the years ahead, will really start to look like traditional sports in the ways that we've understood it in most of our lifetimes. That quite simply, esports is emerging as a mainstream sport for a new generation of fans, a generation that candidly just thinks differently about their sports, media, and entertainment choices. And so in 2018, we set out to build the premier company in that space, and our company has taken pretty considerable shape over that time. So let me tell you about that. So of course, if you're building out a global leading company, you need a great team to do that. And as I mentioned, we really have drawn on our significant sports marketing and sports media experience here. I've shared with you already my background. Adam is, I suppose, the outlier in that context, but a very valuable member of our team as our Chief Strategy Officer. He is actually a co-founder of the business, and I asked Adam to stay in the business with us because he brings significant experience that, frankly, I just don't have. Early stage venture capital, mergers and acquisitions experience, an investment banker, I suppose, by trade. Adam brings all of that experience to our company and to our industry. He's been in many ways again, the architect of some of the acquisitions that we made and likely will make in the coming months. Allison was with me at the Olympic Committee. She was early days added to our team in the spring of 2010 and left after the Sochi Olympic Games to go and join the MLSE team under Tim Mulawicki's leadership. Subsequent to that, joined Bell Media as the VP of Brand Partnerships. but Allison brings great commercial experience. She's a great leader and a great operator, and again, brings all of that sports and media experience. Rakesh, Paolo, Mike Armstrong, Jorge, all of them with varying experiences. Rakesh was with me at the Olympic Committee as well. Tyler Keenan is somebody I've known for 15 years. He spent 10 of those years working at Nike, building that brand here in Canada under the golf division. All of this to say, this is one of the most experienced teams you would find, senior leadership teams you would find anywhere in the world. These guys have extensive sports marketing and big brand marketing and media experience. And again, this is not an industry that's rich with gray hair or the kind of seasoning that this team represents. So very proud to introduce you to them. And again, more to come on that team in the pages ahead. So what does all this look like? Well, in the simplest of terms, and in ways that we've come to understand make sense to traditional sports fans at least, we're building the 21st century expression of Madison Square Garden, or in this country, Maple Leaf Sports and Entertainment. And the focus that we've had in doing that is to take our origin around franchise positions inside the global esports space. So let me explain what that is and why that's relevant to our business model. So if you're looking at a Madison Square Garden, they have franchises in New York Knicks or the New York Rangers. Here at MLSE, of course, Leafs or Raptors. The positions that we've taken in the esports space are franchise positions in the same way. We had to acquire them. We financially paid dearly to acquire that position. We own those franchise positions exclusively and with all the protections that come with them. And we have a direct corresponding relationship with the publisher that builds the games, that owns the IP and builds the games for these leagues. These are franchises in the biggest and most important esport leagues that exist in the world today. And in fact, there are only 4 leagues that have a franchise offering. They are the Overwatch League, the Call of Duty League. Both of those leagues are brought to you by Activision Blizzard, the biggest game publisher in the world. League of Legends, that's a game that's published by Riot, and again, the second biggest publisher in the world. And a league actually that we partly own, Flashpoint, we own that with other team-based organizations. That's on offer from a publisher, Valve. They're the 3rd largest publisher in the world today. These leagues, again, are the biggest and most important leagues in the world. And the reason we're only invested in these positions is because, again, they're the only leagues that offer franchises. So we pay upfront for the license to acquire that position. In the case of Overwatch and Call of Duty, we own the Toronto Defiant and the Toronto Ultra, respectively. Those are our, think of it as our Toronto Raptors and our Toronto Maple Leafs. We own those franchises. There will not be another Toronto franchise that plays in that league. We own the position. We have the market opportunity to develop and grow our business locally around that. In Europe, we own the Mad Lions brand based in Madrid. And again, those are franchise positions in those 2 leagues as well. So again, the parallel that I'm drawing here is to Madison Square Garden or Maple Leaf Sports. Whether you think of it as an NBA or an NFL or an NHL franchise, it's the same model. And it's the same in the context of the business models in these leagues are born out of, again, these professional leagues. They share revenue with the franchise holders. They share the growth, the enterprise growth that builds out around these leagues over time, while they also afford us the chance to build a local market business in the cities and countries that we represent. So every time these leagues do a sponsorship deal, every time they do a license apparel deal, every time they do a broadcast rights deal, we get to share in that revenue as franchise partners in these leagues. And that's the distinction that I'm drawing for you here. If you're not invested in these leagues, if you do not own franchises in these leagues, then your teams play for prize money. And effectively, it's like betting a horse or playing poker for a living. You're hoping that you're going to win every weekend, and you're hoping you can drag some sponsors along. So the unique position of OverActive Media in the global ecosystem is that we are, in fact, the only organization in the world that owns 4 franchises, the 4 franchises that are available in the global ecosystem today. I'll spend a little bit more time explaining that in more detail in subsequent pages, but it's the most important distinction, I would say. And in particular, that revenue share that springs from that partnership with those publishers is the most significant. Like MSG or MLSE, we're content producers. We produce live and digital live events. We produce original content of our own around our teams and players and brands. We're in the brand marketing and sponsorship business. We do deals like with TD Bank and Bell and Skip the Dishes and Universal Music. These are all sponsors of ours. And frankly, again, I would submit there isn't an organization in the world today that's doing that as well as we are. We have 21 global partners today, combination of Canada and Europe, largely focused on Spain. And then finally, as a glimpse of our future, and I'll share more in a moment, like the early days of the Raptors, for those of us on that leadership team, we made the decision to build our own facility. This will be all at once the convenient home for our 2 Toronto franchises, but it will also be our step into the entertainment space in the same way that the Air Canada Centre was Maple Leaf Sports and Entertainment step into the entertainment space as well. We're going to build a 7,200 seat performance venue on the Exhibition Place grounds. We've been working on this project for 16 months. And we're very near to securing all the political approvals that we need from both the Exhibition Place board and the city, which will put us in a place we believe to put a shovel in the ground next year and have a completed project by 2025. So an exciting step for us. And to put a bow on all of that, what we're building here is a 21st century sports, media, and entertainment company with its origins in esports, and with core holdings around the assets that are represented by the franchises that I've described. So that sets up really the rest of the explanation as to our business. I'll skip through some of these slides. They're meant to provide detail to those that are studying the business, but to give you some sense of the addressable market, look at the Call of Duty. That's 240 million global players. In the case of Overwatch, more than 70 million global players. In the case of League of Legends, more than 100 million people consume the global world championships every year. That's a number that rivals the Super Bowl. The point being that there are very significant audiences for these games and leagues, and our business model, of course, is to exploit those size audiences and bring revenue attachment to them, converting them into fans of our teams and correspondingly into fans of our marketing partners and sponsors that engage with us. This is a snapshot of our business in, I suppose, the simplest of terms, but again, we take our core in these franchise leagues. That's our team platform. We are in the live event business. We produce live and digital live events around these game titles. In Toronto, on the other side of COVID safely next year, we expect to be hosting live events for our Call of Duty Toronto Ultra team and for our Toronto Defiant team here. But again, there's a live event component to this that looks and smells just like traditional sport. We will sell tickets. In the early days, as we get started here, we'll be renting facility, whether it be Roy Thompson Hall or the Mattamy Center, but we'll sell tickets to live events to watch our team compete and play. We sell, as I mentioned, brand marketing and partnership attachment with some of the biggest brands that you would be familiar with in this country and overseas. And again, we compete every day in the market with Maple Leaf Sports and Entertainment, the Raptors, the Leafs, and others to win that share of wallet with the biggest brands in the land. And as I just mentioned, we're going to be in the venue and facility business soon enough, and we have a strategy for how we will build that out, which I'll give you more detail on in a moment. In 2020, it was meant to be our first full year of operation. We've again been operating since the fall of 2018. 2019 was a building year as we acquired the team assets and built out our leadership team and operating group. But 2020 was meant to be our full year. Despite all of what went on in 2020 for all of us, we managed to deliver upwards of 60% of our revenue target. We did a little over 8 million in 2020, and I just looked at the numbers before this meeting. We're on track to well exceed that this year. Overall, we've raised just a little over $100 million in private capital to get the business stood up, to acquire our assets and build out our team and operate our business for the next couple of years. As was mentioned, we took the company public on the Venture Exchange in July. And I would tell you, frankly, a little bit earlier than we anticipated, but with an eye to understanding that we had raised very significant capital in the private markets, and we knew we were going to need to have reach to the capital markets to meet the ambition that we have for the company. So it's a welcome step for us and should set us up to grow and acquire as we need to grow our global position. Couple of slides that just speak to the broadness of the industry and the trends that have been going on now for years. But as I said, we first started looking in on the business in 2017, 2018. And in that time, they were projecting really consistent double-digit CAGR growth of revenue. And we've seen that come to be true. And it is projected to continue to be true in the future. I point you to the right side of the slide because it really does speak to the crux of our thesis as it relates to the sponsorship and media rights dollars that are being drawn to the business. Because unless you're invested in the franchise leagues as we are, you're not going to get to enjoy your proportionate share as a business of the biggest drivers of the revenue. Said another way, if you own a franchise, then again, you get to share in those revenues that the leagues produce in the sponsorship and in the media rights space. If you don't own franchises, then you're left to your own accord to sell your own sponsorship. You don't own an asset or a media right to sell. So our investment in these franchise leagues is central to our belief that sponsorship and media rights will be the key drivers of the industry. And as such, we should want to own positions inside these franchise leagues so we get to do our business in the local markets that we represent, but also that we get to share in the revenue that the leagues do. Again, merchandise and tickets, all those things again, we've watched the Leafs and Raptors develop over years. I was actually the executive leading the charge on seeding the building in the Air Canada Centre in those years. So I know what it took to build up that fan base, and we're well on our way here in our business. And, I'll point you to the digital stream, still today, a relatively small number for the industry at 22 million. But boy, are we going to watch blockchain and gaming and NFTs really take hold, I think, in this industry. It's perfectly suited to that. And so I think we'll watch the digital streams grow quite significantly as well in the years ahead. So you're probably asking, how do you drive your revenue? Well, I've already referenced it a couple of times, but it's media rights and partnerships that, spill out of these leagues that we're invested in that are the highest grossing margin revenues. Again, we don't need to spend $1 more to accept our share of the media rights check that spring from these leagues. We sell local partnerships, again, in Toronto and over in Europe in our Spanish office. These are deals that are typically 85, 90% gross margin. This is basically how I've made my bread and butter over years. This is my expertise applied to the Dolphins and the Olympic Committee more recently. And we're doing this already very well with the team we have in place. Again, we're in the events business, which can be high margin business positioned properly. And we'll be selling tickets again in the fall and into the start of new year for our events here in Toronto. We're in the content build, as I mentioned. And, we're not in the merchandise business per se, except again, as part of our rev share through the leagues. We do a little bit of work in the merch space, but candidly, it can be really low gross margin and very, very risk oriented. So we typically license our IP out and we take our points off the top to maintain our margin position and all of it. All of this to say, we typically are delivering north of 80% gross margin revenue to a very connected and a very authentic audience. And I'll give you a little bit more detail there. But this is a very different business than the ad tech space that's reaching this 18 to 34 audience as well in a different way. Our group is connected and authentically and emotionally connected to our teams and players in the same way that Leafs fans are. Again, just a different generation. But for all those reasons, we're able to charge a premium for it. And that's a different business than ad tech. So again, just to highlight that point, the 18 to 34 audience is the target audience. This is the generation of fans that, for forever and a day has been the focus of most every brand in the world. How do we get to that customer at a young age and build them out as a lifetime value opportunity? And esports and the gaming industry more broadly is doing exactly that. Now, there are a number of those that would point to, well, we can do it more efficiently. But what we believe and what we understand to be true is that this is a very, again, young audience, tends to be quite fickle. These are the cord cutters and the ad blockers. And so when you look at the ad tech business, they're reaching to some of the same spaces, but they do it, in our estimation, less effectively. It's, again, gather up billions of eyeballs, charge pennies on the dollar, and deliver a CPM model to the brands that are looking to reach and grow impression. What it is not in the ad tech space, it is not an emotional connection, it is not an authentic, trusted relationship. Again, like the Leafs or the Raptors would represent, there's a reason that organization does $60 million in partnerships every year. It's because the fans and the audience that follow them are emotionally and authentically connected to them, and that leverages into a premium opportunity for those brands that invest. MLSE can charge the kind of money that they do because they grow audience and because they have a great connection to them. That's different than an ad drop. And that's our point of difference as well in our industry. And we know how to sell those sponsorships in the ways that Maple Leaf Sports and others do, because that's what we've been doing for years in our other careers. When you look at esports, and there are two examples here, but nobody in this call is signaling the demise of traditional sport anytime soon, but it is a fact that these sports are getting older and aging out, and it is equally a fact that esports is the choice of sport of a new generation. You look at the growth of the NBA and the NFL, the Major League Baseball and the NHL in this country over years. It's certainly undeniable, but it's also the case that most of those that are fans of these leagues are now approaching or have already exceeded the age of 50. And that's a fact. And in that context, that's a problem for those leagues, because the brands don't want to speak to that mature audience. They want to get, again, to the 18 to 34-year-old, and they want to own that customer for a lifetime and be able to correspondingly put a value on that relationship over time. So that's our edge in the marketplace today, and allows us to tell a different story than, frankly, even the Raptors or the Leafs can in this market. Our leagues are global in their orientation. Again, we own city-based or regional franchises, but they have global orientation. The Overwatch League, for example, has 4 teams in China, a team in London, a team in Paris, another in Seoul. These are global leagues, and as such reach global audiences. I can tell you, in the early days of the Raptors, we'd be lucky to do 40 or 50,000 people on a Tuesday night game across the country. Our teams play routinely in front of audiences that are anywhere from 100,000 or more on the low end to upwards of 1 million, 1.5 million for the biggest games we play in any given year. These are massive global audiences, massive reach across these leagues that we're invested in. And again, these are native digital audiences. Our leagues and our teams play on the platforms where the 18 to 34-year-old spends their time. And I'll touch on that again in a moment. Evidence of all of this, I point you to a Nielsen study conducted in 2019. And in that study, they concluded that the fastest growing league in the world in 2019 among the 18 to 34 audience was, in fact, the Overwatch League, ahead of the NFL and the NBA, Major League Baseball, and the NCAA football or basketball. The fastest growing league in the world was an esport league against the most coveted audience available to brands today. So that tells us that we're on the right track. Quite simply, our teams, our leagues, our fans are on platforms today, are on the platforms where our audience lives. YouTube, Twitch, more recently Twitter and TikTok. That's where our audience lives, and that's where our teams and leagues spend their time. I like to include this slide always because it speaks to the very thesis and the birth of the company, frankly. So we first noticed this slide in 2017. I think the slide is actually 4 years old now, but it's no less relevant today than it was in those days. The global audience in 2017 for esports was approaching 170 million 4 years ago. Already having eclipsed Major League Baseball, already having eclipsed the global audience for the National Hockey League. But what we noticed right away was that the average revenue per fan that was being extracted from the global esports audience was still only a relative fraction of these major traditional sports leagues that we've all loved for years. That seemed like an arbitrage opportunity for us that we could not miss. Since then, of course, these audiences continue to grow and have done so as projected and at an accelerated pace, even through COVID, of course. And the average revenue per fan is starting to move. But it doesn't need to go to $50 for us to be successful here, given the size of this audience. So this was, again, the crux of our thesis and the birth of the company in this moment. And as a matter of compare, this slide in this case study makes sense to me because I was in the NBA at the time. But I'll take you back to the formidable years under David Stern's leadership as commissioner of the NBA in the late 80s and throughout the 90s. There were a number of NBA franchise transactions at the team level, teams bought and sold to various owners over that period of time. On the low end, I think the Houston Rockets were sold to Les Alexander and his group for $84, $85 million US. On the higher end, I think Portland and Boston were both transacted in the low hundreds. But if you throw out that low and those highs and you normalize the rest of them for inflation, you get the rough equivalent value of what we paid for just one of these franchises. When you take that fact against the, what we understand to be true today, that there isn't an NBA franchise in that league that's worth less than $2 billion US. And you marry that up against the fact that our audiences are growing at 5 and 6 times the clip next to the NBA audiences in those times. We feel pretty great about the fact that we have our arms around not one franchise like this, but 4 of these that, again, global and have such huge digital audiences. And we're not the only ones that saw this. If you go back and look at the early days of the birth of esports, you'll see that Robert Kraft in 2018 was in fact the very first franchise owner in the Overwatch League. Earlier, what a sound team that we built. And again, as you've started to understand, no doubt, a big part of our success here is going to be our ability to continue to participate in those franchise leagues where we get to share in those revenues and those big partnership deals that the leagues do, but also grow our business locally in the markets that we represent. Again, this is where I've made my bread and butter over years. But there's no doubt that we took an early and very deliberate intention around developing sponsorship agreements. And in fact, our first and founding partner was Bell. Bell had been a 10-year client of mine at the Olympic Committee, great relationship with Wade and George in those years. And in fact, we got engaged with them early at George's invitation to talk to them strategically about how OverActive Media and Bell might find alignment. In 2019, as a result, we were proud to announce that Bell joined us as our founding and premier partner. That's a multi-year, multi-million-dollar strategic deal that positions OverActive Media and our teams and brands to help them promote their Bell 5 position in the broader market. And with that deal done, we were able then to go to some of the other non-endemic, more traditional brands in the market and overseas as well, and tell them the story about how Bell and others were starting to jump in. So over that time, we added Canon and Universal Music, Skip the Dishes, more recently, TD Bank, Red Bull. In fact, as you probably noticed, I'm standing in our Red Bull studio here in Liberty Village. But again, our focus has been on the development of our local sponsorships in a very strategic way. Typically, organizations in the esports space are doing transactional deals. They're one-year deals. In some cases, they're not even cash. Our deals are all cash. Our deals are all typically, sorry, I shouldn't say all. Our deals are typically multi-year deals, and again, strategic in their orientation around brand development and again, meeting a strategic objective for these brands as they line up around our audience. And so we've been, I would argue, more successful than virtually anybody else in the world. It's also the case that Bell saw enough potential in OverActive Media to also be an investor. And so we took them on at that same time in 2019 as a strategic investor in OverActive Media. They made a $10 million investment in us at that time. And more recently, as part of our sub-receipt raise, we did a private concurrent round also in Q1, and Bell led the way, seeding that round with an additional $2 million. So Bell is invested in OverActive Media as a strategic partner to the tune of $12 million today. And again, have really helped us set the market around our sponsorship business. It's also true that our business attracts celebrity, and we have our own good number of them. The difference between OverActive Media and many of those that you see in this space is every one of our significant influencers have written a check to be investors and shareholders. In 2018, it started with Abel, and the Weekend was an early stage investor in OverActive Media. More recently, Mitch Marner joined the family last summer. Others that aren't listed here, Sidney Crosby, Phil Kessel, Carl Hagelin, again, all wrote checks to be invested in OverActive Media. And the reason that's important is because our fans want to know that those who are, touting their celebrity against our business are authentically connected to it, vested in the position with the fans. And so for those reasons, we've never given our equity away. We always insist if they want to be involved with us, they have to write a check like others have done. Willie, Rex, and Vegeta, I wouldn't expect that you would know either one of those two, but I mentioned them because they, again, are shareholders. They also happen to be the biggest Spanish-speaking YouTube influencers in the world. These two guys combined have now more than 100 million social media followers in Spanish-speaking esports. And you can imagine they're pretty strategic and important to our partner relationships overseas. Just to wrap up here, to give you a sense of, again, how the business has grown, I mentioned we founded in 2018. In 2019, that was really our building year. You'll note that we did acquire some revenues. We bought 3 small companies, and they came with some revenue attachment, but those deals were not in any way strategic. So 2020 was really meant, again, to be our first full operational year. And really, we built our commercial business from scratch. We managed to get to, as I mentioned earlier, a little over 60% of our original target, even though we ratcheted our expense strategy back quite aggressively in the early days of COVID. So we're pretty pleased to get to 8.4 million in that year. And as I mentioned earlier, by all accounts, we're on track to well exceed that this year. But look at the EBITDA progress in just the 2 years. That's directly corresponding to the high gross margin revenues that we take into the business. To see that number start to shrink in the way that it has speaks to that gross margin strategy that I referenced earlier. And then just quickly, I mentioned our intention and desire to build a 7,200 seat performance venue in the city of Toronto. I say it exactly that way because it is a distinction that I like to point out. We are not building an esports venue. We're building a performance venue that will allow us to compete head to head with Maple Leaf Sports and the other venues here in the city of Toronto. It is a fact that if, Toronto is now the 4th largest market in North America. It is the 5th global market in the world, the 5th global market for entertainment, music and entertainment. And yet all of that, in spite of the fact that there's really only one arena for them to play in, and that's the one that's conflicted out 100 nights a year with the Leafs and the Raptors. So understanding and seeing that market gap, we put our sights early in the birth of the company to imagine that we might build a venue to take our business into the entertainment space. And the Kimmels, as you might know, are invested as our primary shareholder. No strangers to the development side of the business. And so Mike Kimmel came to me in January of last year, in 2020, and let me know that he had located a land opportunity for us. And over that 16 months, we've been developing this strategy. We hired Bob Hunter, my former friend and colleague, or my former colleague and longtime friend, out of Maple Leaf Sports. You might know Bob as having built the BMO Field here in Toronto, the Raptors practice facility, Launchpad, the facility for the MLSE Foundation. Bob has been the executive sponsor and owner rep on all of those projects for MLSE. And Bob, from day one, has been leading this file for us. Again, a 7,200 seat venue. There will be nothing like it in this country. It'll be unique, I believe, by the time we're done. A unique venue in the city and the country, and will set us apart and probably also put us in a place where we can develop Toronto as a global hub for esports. The tech that we imagine, Bell's 5 technology, now their 5G enabled environment, we'll be able to do some pretty incredible things in this space. And we're pretty excited about this, again, bold step for us in the direction of becoming the sports media and entertainment company for the 21st century fan. And then finally, I started with people, so it's appropriate that I finish with these people. But I could not be more pleased and proud as a CEO to be working with this group. Again, Sheldon Pollock is our chairman. He was a founder to this idea, working alongside Adam in those days, and came together with the Kimmel family. Sheldon is a longtime success in this country, an early stage tech innovator and investor. Current sitting chair of Acuity Ads, and also our chairman as well. Just a sterling reputation, and again, a shrewd businessman, but a very fair leader. Mike Kimmel and his family, I'm guessing you know the Kimmels, very quietly one of Canada's billionaire families. Mike and his brother Jeff and his cousin Ryan are the 3rd generation of that family's wealth. And Mike and Jeffrey under Harlow Entertainment have founded a collection of hospitality and restaurant businesses, Chase Hospitality Group here in Toronto. More recent investors in the Pittsburgh Penguins in 2016. Again, really strong attachment, strong community leaders, and again, great principal shareholders in OverActive Media. And then, as I mentioned, Rizwan Jamel, currently down at running Bell's residential and small business services. Rizwan representing our strategic investment from Bell at the board table. And so I'll wrap up there and certainly take questions as you may have them. But what I would hope I've left you with is that OverActive Media has a very unique position in the global industry today, an industry that by all accounts is on a rocket ship and and puts us in a place where we own the most unique and I would say coveted assets. We've got a strong orientation around building, again, a 21st century sports media and entertainment company with its origins in esports. And we have a strong operating group and well backed by the sponsors and board members that I mentioned. I'll wrap it up there, but again, thank you all for your time and for your interest in OverActive Media.
Fantastic, Chris. Thank you so much for that. By the way, great job covering a lot of things that I was going to ask you, so it's going to save me some time there. I want to remind everybody that's listening, if you've got a question for Chris, please use the chat function, and I'll do my best to ask the question. I mean, this is a certainly for old people like me, this is a relatively new industry. I've got kids. I know the demand. I know where they're spending more time. You know, they rarely watch sports right now. They're watching, you know, videos and YouTube of kids playing all sorts of games. You know, what I found probably really impressive, and it was going to be a question of mine, but clearly other sports owners and people around the industry are recognizing what's happening here. It was good that you had that slide to show that, you know, Robert Kraft and some of these other players are there. I don't even know where to take this question. It's more common than anything else, but I'm very impressed by that fact. What's it going to take for old guys like me to really come to grasp how big this thing is starting to be? You know what I mean?
Well, yeah, we got 80 million shares out there right now, so there's a few of them that are already there ahead of you, I suppose. But you know, I would say I worry. Sorry, don't worry about it. I think about that in the context, of course, of investment, because you know, the nexus we're trying to align with here is we're building a business that speaks to today's generation of fans that, again, think differently about sports media and entertainment choices, but we're building out the asset base of the company with the likes of those on this call and others around me, you know, that have already made investments in OverActive Media. So, you know, my job is to translate, you know, my job is to translate that gap and that opportunity to, you know, folks that are on this call and others. I think I can tell you it's a lot easier today than it was 3 years ago. It's funny, I don't know that I've ever had more media attention as when I announced that I was leaving the Olympic Committee to start an esports company, where 90% of those listening probably didn't even understand what that meant. And I ended up in a number of conversations with all the media houses here in the US and globally about, you know, why I was motivated to do that. What I haven't shared is in 2016, when I was the CEO of the Canadian Olympic Committee, as I mentioned, I didn't leave the Olympic Committee until the fall of 2018 to join OverActive, Sheldon, and Mike and the group. But in 2016, I was approached by an executive search firm out of New York to go down and meet with Activision Blizzard. At the time, they were building out their strategy for the Overwatch League, and they were looking for a commissioner. And I was approached about being the first commissioner of the Overwatch League. And I must admit to having taken the call, you know, as a dear friend of mine out of New York, and he said, "Chris, we think you're perfect for it. Will you go down and talk to them?" And I said, "As long as everybody understands, I really don't know much." So, of course, I dug in to be ready for the conversations. And I came out of Irvine that day. I'd spent the whole day with the Blizzard team. I came out of Irvine the end of that day, quite compelled by everything that I heard, and then back to Santa Monica to meet with the Activision team. And by the time I was 4 or 5 months into that discussion, and it was between myself and one other. And then in the end, they pivoted and filled the job from within. But all this to say, I was totally compelled. If they had offered me the job, I was taking it. And so in 2016, I was sold. And then in 2018, it just happened that Sheldon called me out of the blue and he said, "Hey, stop by the office tomorrow because we've got an idea. We think this is it's an esports play, and we think it's going to look like traditional sports, and we want to talk to you about how you see that." And he didn't have any clue that I talked to Activision, so I didn't want to miss it twice. And again, I like to think that one of my strengths is as a communicator. I think it's part of the reason I've had success in my career in the partnership space. And so again, I view very much my role here to tell the story of the growth and development of esports and gaming globally, and how OverActive Media fits into it uniquely.
Now clearly, you mentioned Bell as a partner and strategic investor, and you mentioned some other pretty high-profile individuals that are investors. Why don't we talk about the sort of current structure of the company, the insider percentage ownership, and maybe give us a sense of the other shareholder base, what it looks like.
Yeah, sure. I mean, I've highlighted it for you largely already. I suppose the founding, the premier partners with the senior position investment in the early days were the Kimmel family, Ryan and Jeff and Mike, and Westdale Properties by extension. I think today they own about 20% of the company. Sheldon, through his holdings, is around 5%, and Bell's a little south of that. The rest of it has been, again, high net worth individuals, private investors, predominantly here in Canada, although with some reach into the United States and a couple in Europe. I think it's quite telling that we saw a number of institutions jump in as part of our go public round. So, I'll save them by name, but we had more than just about $20 million in investment from leading institutions. TD Bank led the syndicate along with Echelon, Cormark, and A Capital. TD is a great relationship of ours, and since then have come on as a sponsor as well. But we certainly see the development of our reach to the investor community is starting to take shape in the U.S. The building's going to be a big part of the story, I think, going forward. Again, the gross margin story is compelling when, again, you lay it next to some of the other opportunities in the space. And what's starting to take shape is we're starting to get a sense of the cyclic nature of our business. We certainly are expecting Q3 and Q4 numbers to be quite strong. Again, based on our success in partnerships, and again, given the way our revenue streams flow out of the leagues that we're invested in. So there's an annual recurring revenue story starting to take shape around this young business that we're excited about. Couple that with, again, the high gross margin focus and the long-term discount cash flows that spring from these franchise leagues, and we feel pretty good about our position right now.
Now, again, you just went public several months ago. I believe you raised $38 million on that financing. What does that do for you, and what do you see as potential future financing requirements?
Yeah, it gives us obviously working capital and room for the business to breathe and grow, and watch the industry breathe and grow alongside of it. It gives us, of course, some capital available for potential of M&A. I mean, what's interesting about this industry is it was a bit of a boom all at once in North America, and candidly, there were a few organizations that bought off a little bit more than they can chew. So there's a bit of a consolidation happening in our estimation right now, and so we've been looking in on opportunities in those ways. So it gives us, again, the freedom to maybe make some of those decisions. In terms of future financing, the timing around that is still to be determined. The venue work that we're doing right now, we think, again, positions us to be in a place to choose to put a shovel in the ground as soon as next year. I would expect that we would do a financing around that, because it would be a great story to tell. But again, more to come on that.
The challenges, like what do you see as your big challenges going forward? And let's throw COVID into that, because we're clearly not out of COVID. How do you see your industry having to deal with issues around COVID?
Yeah, listen, nobody would have wished any of this upon the world, but I have to say it's been a bit of a boon for this industry, because we were native digital in the first place. It was an easy pivot for the industry broadly and for the leagues that we were invested in. So we never missed a game. We never missed a season. We didn't miss a moment. And in fact, we watched viewership, scale. We were really the only game in town for a few months there. And again, we picked up a fairly predominant position among those who love esport and gaming more broadly in 2020. But probably the biggest impact to our business, around COVID was the absence of live events. We were planning to host no less than 4 events in Toronto around our Toronto Defiant and our Toronto Ultra team, our Call of Duty team. And, it's pretty significant revenue assumption, and maybe as importantly, really great opportunity for our fans to connect and enjoy the live experience and see the show that we would put on. And again, have the chance to be together in real life as fans of the team. And so, we lost that opportunity, orders of magnitude, that was as we saw it, a $3 or $4 million revenue hit. And so again, we did well in spite of it. I think we did about as well as anybody could have reasonably expect with the work that we did in 2020, but we'll be excited to get back to live events in 2022. Otherwise, I would tell you, we haven't really missed a beat. I mean, in the time that we've all been dealing with this, we've raised now close to $46 million. We've garnered, I think, great confidence among our investor group. I think we've garnered great confidence in our league partnerships. Activision Blizzard would tell you if they were on this call, they look at our Toronto-based organization as leaders in the two leagues that we represent with them, and certainly same would be said by Riot in our reach into Europe. I should say, because it's funny how we talk about a business that owns sports teams and we don't talk about a business that we find a way somehow not to talk about the success of the teams, but our teams are just killing it right now. Our Call of Duty team was 8th in their first year, and they lost in dramatic fashion in the final this year. We finished 2nd in Call of Duty. Our League of Legends team was a rookie squad born out of our talent identification strategy and some great work on the part of Adam and his team. And that team is back-to-back championships in Europe now. The European League of Legends is widely thought to be the strongest league among the 4 global leagues that exist in that game, only after China. And our team is back-to-back champions and are off to Iceland for the World Championships in just a couple of weeks. And our other teams all made the playoffs. So we're really pleased with the progress that we're making from a competitive perspective. Again, I come from a long line of sport organizations. We want to build champions here, both on the stage and in the boardroom. And we spent a little bit of time today talking about how we're going to indoctrinate that view to how Call of Duty takes that step to become a champion next year, and how we celebrate our champions in Europe. And I just love that about all of this. It's so fun to birth a new industry while we're birthing a new company.
That leads me to another question I didn't even think of asking, but I mean, we know how young hockey players get drafted and get put on a team. How does somebody make one of these teams? How do you crack the lineup?
Yeah, well, each league is subtly different, but the beauty of it, I suppose, starts with the fact that they all play on a server somewhere. And so through our connections and relationships, contractual relationships to the publishers and the leagues, of course, we have access to all that data. So it starts with an in-depth kind of data strategy to, identify the players in the various regional leagues around the world, or in the development leagues, and looking in on, who's got momentum and who's statistically playing the game at a high level. But it goes well beyond that. And again, I would not, now 3 years into this, I would tell you that just like professional sport, you're not just looking for the best mechanically good player. You're looking for good humans, right? You're looking for people that can come, and these are young men for the most part. There are some women that play at a professional level, but very few at this moment in the industry's development. But these are young people that, prior to arriving to these leagues and these teams, learned how to play the game as individuals. And so, part of the development strategy here is to identify not only skilled players, but teach them how to be good teammates and teach them how to work together. And these games all, again, for those on the call, if you don't know the games, then you wouldn't understand this, but these games have positions inside them. You have roles to play. You need to work in a coordinated fashion to execute strategy. It's no different than, a hockey player that specializes in the penalty kill or the power play. They all have to learn how to be a team as much as anything else. And so we have performance people that, work with them in their physical well-being and their nutrition. And we have team psychologists that work with them on their mental health and their sleep. And again, I would encourage everybody in this call, if you're interested, to dig into it a little bit. But, I would tell you that we've had a good talent ID strategy from the beginning. We're starting to build a reputation as an organization that has a keen eye for the next kind of comers. But what we really are starting to do well is again, educate them as athletes, what it means to sleep and hydrate and manage their diet and train physically as well as mentally to be as good as they can be. And if they can do that, they can have long careers and make money, a lot of money in a growing industry.
Wow. How does somebody, is it, brand new to this, like the average person that's probably listening has never watched a competition like this? How does somebody get a chance to see this? Is there a website that we can go to, point us in the direction of one of these?
Yeah. So again, in the context of our business, we will be hosting live events next year. So if anybody in this call would like to attend and come as our guest, please just reach out to me and we'll figure it out. But we'd love to have you and introduce you to our business and to the live event experience around our Toronto teams. That said, you can go and look on YouTube, just look up live event esport. Some of the biggest tournaments in the world are played literally in front of hundreds of thousands of fans in the case of China. The biggest tournament in the world pretty consistently is Katowice, Poland around Counter-Strike. There have been as many as 140,000 people on site to watch that played live. The numbers are staggering. They really are. And again, I go back to my Raptors days, right? I mean, a good audience for that team was measured in the tens of thousands on TV. Because these are native digital audiences, our Mad Lions team, because they're European based, routinely play in front of hundreds of thousands of people for regular season games. Like, it's just undeniable that it has scale.
Wow. Okay, so listen, take out your crystal ball, do the best you can. Tell us what this business looks like, 5 years from now.
That is maybe the toughest question to answer. And again, because it's an emerging industry, but maybe more relative to how we think of the business that we're building. Again, today, I know that we get thought of and considered appropriately, I think, at this moment as an esport company, of course. But as I've said now half a dozen times on this call, we're building a sports media and entertainment company. And with a focus on how we reach authentically and connect to today's generation of fans who think about loving esports and cryptocurrency and millennial money generally and fashion and music. And, all the years I've been doing this, I've never had a music partner. Universal Music has been our partner for the last 2 years. That's because they see the same thing we do. They have to reach the audience that we reach. So we see reams of opportunity in that. We see deal flow all the time, but the measure of things that we're considering and the business that we're building is going to be based on reaching today's generation of fans. And how do we connect brands in particular authentically and emotionally to that audience? So that can be, of course, through our esports teams. Teams is a platform for us. The venue strategy, once online, is as much about building those fans a home, a destination where they can go. And you better believe we're going to have an incredible data strategy. I'd like to think perhaps built on the blockchain that allows us to track and understand behaviors and habits and purchase power and create experience for them around Bell's 5G technology and all those things. And then, again, we look in on creative agencies. We look in on communities that are being built online, all of which, they may be esport fans. They might be adjacent audience fans where, if you ask them what do they love, again, I'll make it up, crypto, fashion, and esports is number 3. But just like those early days of the Raptors, that's a chance for us to take the declared esport fan and convert them into fans of our teams. So what I love about our orientation here is it can be whatever it wants to be. It'll certainly always be esports, but I think, we're going to be in the entertainment business the moment we open the doors in that business or in that building. We're going to be in the data business, of course, because all of it's native digital. And so we will have a robust strategy there. And we're going to be in the media business. I dare say, if you think of it, in the old days, we would have thought about, broadcast organizations that own multitudes of channels. That can be true for us today. You can be a multi-channel network by building out strategy to acquire YouTube channels as one example. So that's the business we're building. It takes its origin in esport. It's a great and passionate audience, and I think again will be core to our business forever. But there's so much that we can do in the name of sports media and entertainment, and some of it hasn't been defined yet.
Gotcha. So listen, as investors, all of us investors here, what sort of catalysts or metrics should we be watching to sort of see if you're executing on your business strategy?
Great question. Thank you. Again, continued growth in revenue with understanding and sensitivity to the the cycles that exist in our business. Q3 and Q4 are typically going to be our bigger quarters because it's when we realize our rev share from the leagues. So more to come on that, but of course we'll have Q3 numbers forthcoming. We will have typically, then Q1 would be next strongest, and then Q2. So when you think about it, we just launched the company, and the first thing we did was put out our weakest quarter. So we're pretty excited about what's ahead for us. But I would be looking at growth of revenue. The organizations that are going to be strongest in this space are going to be the ones that can drive revenue, and more particularly strategic partnerships like we're doing already very well. Then the other part of that is, again, I referenced it in passing, but the discounted cash flows that spring to this business as these leagues take shape, as they continue to grow, as they do bigger and more bolder partnership deals and broadcast rights deals, doesn't cost us $1 more to take that rev share in. So as we mature, should watch our revenue grow organically by virtue of our involvement in these franchise leagues. So top line revenue. And then, like any business, you want to know that we're doing it responsibly and well from an expense standpoint. And again, in the context of high gross margins, we should be able to move that, today stated loss to a more profitable picture fairly quickly. So I would say those are the measures in the short term for our business. Longer term, you're going to want to see us realize our vision as a sports media and entertainment company, the milestones around the venue, and what we do with our M&A strategy to build out the media piece of our business.
Fantastic. Listen, Chris, want to give you a chance to give all our listeners just a parting message or a key takeaway that you want everybody to walk away with today.
I'm, of course, rooted in my own bias, but I think we have the strongest group of leaders, perhaps, that I've ever worked with. And it's unique insofar as, they have all arrived. They've arrived to this business at a time when they're seasoned and experienced, and they're bringing it to a new company and a new industry. If I'm an investor, I'm thinking first about the qualification of the management team and the experience that they bring, and are they showing success different from others? And we are. And so as you dig into this space, as you look at other team-based organizations, as you look at others that are thinking about how they reach this coveted audience, I would encourage you to look at the assets that they own. So if you're looking at esports organizations, do they own teams in the franchise leagues? And there are relative few. I highlighted for most of you all of those today. And then, are they delivering revenue in the ways that I'm describing to you? Because I'm telling you, we are one of the few that are delivering consistently a rev picture that is starting to make sense. And that is our point of distinction in the industry right now. We're building what we believe is a big multi-billion-dollar company here, and we're really in the first inning. But we have the strongest assets. I would argue we have, Sheldon and I like to joke, we have the Muskoka lakefront property. It's just a question of how high we're going to build the towers.
Yeah, and I just think back, how many hockey fans would love to have been able to buy the Toronto Maple Leafs early, or the Detroit Red Wings, or any of the big teams early? This may be your chance.
Totally. I'll just put a point on that. I joined the Florida Panthers organization when I left Maple Leaf Sports to run the business of the Florida Panthers. That team had just been sold to a limited group of partners for $120 million. That team, despite its woes, despite its challenges in that market, would not be sold for less than $750 today, US.
Yeah.
Right? That was only 15 years ago.
Yeah, there's not very many poor sports franchise owners out there right now. I think they've all done pretty well.
Yeah.
Chris, this has been great. This is exciting. I mean, I'm really impressed with sort of the validation that you've seen from certainly significant partners, shareholders, and a lot of the big names that you've got in your team. I think that's fantastic. If somebody wants to get more information about OverActive Media, what's your website address, or what's the best way to get more information?
Reach out to me directly. I'd love to have a conversation with you and go deeper with any questions you might have. My email is coverholt, COVERHOLT @OAM.GG. So send me a note, and I'd love to chat with anybody who'd be interested in hearing more.
Awesome. Awesome. Well, I'm looking forward to hopefully one day catching a live event and seeing how everybody gets excited about this stuff. This has been great. We've been speaking with CEO Chris Overholt. OverActive Media, symbol is OAM on the Venture Exchange. Chris, great to chat again today, and we certainly look forward to catching up to you guys in the near future.
Thanks, Paul. Appreciate the opportunity.
You bet. Thanks.